Alrighty, folks, what the heck happened in the stock market on Friday? Is this the beginning of some epic crash? AI? Is it just a broadening out of the economy? What happened with the jobs number? The headline number was something amazing, but are there cracks below the surface? And probably most importantly, next week we get CPI reading on Tuesday. What is expected? Will it be market moving? What says the one and only Mr. Dan Bird? How you doing, sir?
And we get PPI on Thursday.
We do. We get PPI on Thursday with retail sales, another cut at unemployment, and lots of economic data coming.
And by the way, something that's not talked about too much is the revisions to the jobs.
Yeah, that was huge this week. Yeah,
it's funny. It's funny how that happens during an election year. I'm not implying that the numbers are manipulated, but just saying.
Just saying. Yeah, I think they've been revised down 10 of the last 12 months. So
right.
Definitely some quality control going on at the Bureau of Economic, Labor, and Statistics. But let's just jump into the jobs number.
Good. That's good.
I talked about it on my daily. If you just looked at the headline number 275, blowout number, the Fed's going higher for longer, all of that stuff. But man, if you scratch the surface even a little bit, we've got huge revisions. We've got part-time versus full-time. The job market, simply said, is not as healthy as that 275 number would show. And the swan rule is in trouble now because we had a bottom at 3.4. It's now 3.9. And it kicks in when it goes up 0.5%. So we've got all kinds of problems in the job market.
There you go. Bingo. Unemployment rate. Here's the chart that I've showed many times here. Make it a little bigger.
Thank you.
There's the SOM rule.
Yep.
So as you can see, these are the recessions. Whenever that line crosses, and it crosses at, well, it really needs to get to about 4. So it's going to have to cross a little above that line right there. But SOM rule is when the 3-month, which is the pink line, rises by more than 0.5 points above the 12-month average, which is 3.5, so 4%.
Right.
When it gets above that, then a recession is in sight.
Yeah, this is a very little known rule. I actually hadn't read about it until earlier last year, but it's been remarkably accurate.
Right. Yeah. And the reason is that once the unemployment rate starts rising, and that's why I'd rather look at the rate rather than the jobs number.
Sure.
Because they get revised so much.
Yeah. Yes.
I mean, the politicians love to use it, say, oh, we've added a lot more jobs.
Mm-hmm.
But the unemployment rate is a more important one. And
agreed.
Because of this. And I added this rate of change chart down below.
Oh, interesting.
So you can see not only, is it creeping up, but what has the rate of change been?
Yeah, it's going to be very interesting. I've always said that 4.2 is the number. Yeah. It kind of is when I'm going to get concerned again, because we're coming off such artificially low numbers. 3.4 is, remarkably low. I will get concerned at 4.2. And I think we could get to 4.2, the next 3 months, possibly.
Yeah, so that's what happens with the unemployment rate. And you can see it back here. Once it starts moving up, in fact, usually once it crosses this line right here, it accelerates very rapidly.
Just takes off. Yeah, exactly.
Right. So if it gets to 4.2, yeah, there should be reason for concern because that means it's already accelerating. Exactly. I mean, it went from 3.7 to 3.9, which is a pretty big jump.
Yeah, and just be fair, as you can see in the chart there a little bit, it had hit 3.9 before and then came back. So yeah, it is possible that it goes the other direction. I'm not sure that's likely, but it's certainly possible.
Yeah, it's possible. Absolutely. Anything's possible.
Mm-hmm. Yeah.
So I put this in the newsletter this week as well because it was important. Anybody that is interested in getting the newsletter, just go to my website at breakpointtrading.net and click on this button right here. I'm actually use the newsletter in our conversation.
I love that you use your newsletter to do this show. It just shows the value that's in there, and everybody can get it for free every week. They can get this.
Yes, it's free. You can get it without even registering.
Yep.
but you have to take the effort to go out and click on the button.
Yeah.
If
You
you
can't do everything
register,
for them, huh?
yeah, if you register, yeah, I can't put it into their brains.
Yeah.
If you register your email, which is free also, there we don't sell or
Yeah.
give away emails to anybody. We don't ask for a credit card or anything like that. Just sign up for the $0 subscription, and then you'll
Hmm.
get reminded when that newsletter is ready
Right.
with a link to the newsletter. But
Yeah.
if you don't want to do any of that, just go to the website, usually on Saturday or so. Saturday
Hmm.
this week, it was late Saturday night. So anyway, this is last week. There's the unemployment rate, 3.7 to 3.9. Next week, CPI. So
Yeah,
in
CPI is going to be interesting. I'm actually looking at the month-on-month numbers.
right.
They're, you know, they were down. They were like point 0.1 for quite a while. Now last month I think was point 0.4. Oh yeah, there it is, point 0.4. We're talking about a point 0.3. Man,
Yep.
this is a problem.
That's core CPI. Headline CPI is going up month over month.
Mhm.
Interestingly, they're keeping the year over year the same, which actually is I don't disagree with that. I thought maybe they would drop it down to 3 or even 2.9, but
Mhm.
3.1 I think is what's going to happen. It could potentially even go up a little bit.
Oh man, if it goes up, that'll be it. Did it go up last month? It did, right? Or no?
Yes.
It didn't.
Well, it well, I'll tell you what. Let's take a look at it.
I forget.
Because I had that.
I know it was above expectations, but I forgot if it actually went up or if it went sideways.
Yeah, on my website I have CPI, PPI, and TCE right here.
Look at you.
So CPI headline shows it right here. It went down
Oh,
from
it
3.3 to
did.
3.1.
Okay.
Forecast though
Got,
was 2.9.
got it. So yeah, so it did go down. So we're forecasting a flat headline, year-on-year headline.
Forecasting a flat headline. Remember last month they forecasted 2.9,
I remember.
came in at 3.1. Now they're forecasting flat, might come
Mm.
in at 3.2.
I don't know if you've got it ready. I'm sure you do. Commodities, what have they done this last 30
Yep,
days or a couple of weeks?
right. That's the reason. That's one of the reasons why it may come in higher.
Oh yeah, look at that.
So food just keeps on going higher, just screaming higher.
Yeah,
So
that's
this
not good.
this shaded area is what the report's going to reflect for CPI.
Hmm.
So all of these have gone up in the month. Gasoline, oil, CRB. Now last month they went up slightly. Food went up a lot, quite a lot. So that's why it didn't hit that forecasted number of 2.9, even
Right,
though it
was food. Yeah.
came down to 3.1. It didn't hit the forecast, and this I think is the reason why,
Hmm.
because commodities were going up, but have gone up even more since then.
Wow.
So that's why I say it could be higher than 3.1.
Hmm.
But
Crazy.
I think 3.1 is a reasonable place to put it.
Okay.
Um, the other thing to look at is, I think I had it here, CPI right here. This is the one that drops off. It's a fairly large one. It's not
Mm,
quite as large as the previous month,
right.
but it's almost that big. So when a big one drops off, it helps the
Hmm.
number.
Yep.
So that's going to help it some, but commodities are going to hurt it. So that's why I say 3.1, basically flat, makes sense,
Hmm.
because this big one should help it, but the commodities are going to hurt it.
Okay.
But look what happens next month.
Yeah, nothing. Flat.
Get that little tiny one next month.
Ugh, that's going to be tough.
Yeah, that's going to hurt. And if commodities keep going up, I mean, we could be back to 3.4.
Yeah, could be.
Yeah, and the Fed might raise.
Maybe. Maybe. I would not hold your breath on that one. But yeah,
I,
anything is
I
possible
said,
to use
I
your
said, I
phrase.
said might. I said might.
Yeah. Yeah, yeah. I understand. I'm just teasing.
Yeah.
Yeah,
Um,
it's gonna be wild. So the other if you want to I want to look at what happened to Nvidia, unless you wanted to go somewhere else.
let me do a couple of other things
Sure,
first, just
please.
on the market. So
Yep.
this is again from my newsletter.
Hmm.
So this is since 2009, the bottom 2009. This is the
Oh well. Yep.
channel that we've been in. Came down for COVID, came down in 2018 for the trade war.
Hmm.
Went above it right here in 21, that was seriously overbought, but we're getting back close to it again,
Mm.
back close to that upper line.
Okay.
This is the actual S&P. Again, it's following the trend higher, but it's not breaking out higher, and the negative divergence is still in play.
Yeah, you've been calling that for the last 3 or 4 weeks.
It's actually more than that even.
Mm.
The negative divergence really hit my radar screening right here in end of January
Okay.
when it hit this peak and went back down and didn't
So
go higher.
6 weeks. And again,
Right.
we got receipts so people can go back and look at them. Yep.
And these things, they are leading indicators
Mm-hmm.
versus most everything else in technical analysis is lagging.
Right.
But these are leading, but it takes a while for this to play out. So the market could just keep going higher. There's CPI that we talked about. There's the unemployment. This was interesting over the last month. The sectors that are dominating now are defensive sectors.
Mm.
So all of the aggressive growth sectors, the NASDAQ 100, technology, consumer discretionary, which is the internet stocks, and communication services is internet stocks and consumer discretionary. They are all at the bottom.
Mm.
Over the last month, they are seriously underperforming the market.
Yep.
I talked about this, in my newsletter, the fact that this could be implying right now that there's rotation out of the aggressive sectors into defensive.
Yeah, so I wanted
So,
to poke at that a little bit because again, you could look at it as kind of switching your horse, if you will. But the
right.
other thing that it might just be is could it also just be broadening out?
Yes,
Okay.
absolutely. And that would actually be healthy
Yeah,
for the
broadening
market.
out healthy, switching scary.
Yeah, moving to cash is scary.
Right. Okay.
If they're moving out of aggressive because these have gone up so much, they're taking profits and they're moving them to other areas that they think are going to start going up too.
Right.
Then that's good for the market. The market, while it might not scream higher, it won't crash either.
Correct. That's what I
So
wanted to ask you.
that's a healthy thing. Here's the top 10 winners and losers. These are large caps, and Nvidia is right there, still up there, 76% gain. This is year to date.
Year to date, it's up 76%.
Year to date.
Oh my goodness. All right.
By the way, I might be out of Nvidia next week.
Oh, I was going to ask you that. That was a
Yeah.
stock
Well,
that you bought significantly lower and you said might be a forever hold, but
yeah.
tell us
Well,
more about that. What the heck is what's
well,
going on?
I'll talk about that when I look at the Nvidia chart.
Okay, fair enough.
Another one, interesting one, is Constellation Energy, utilities.
Mm.
Utilities is the second best performer year to
Now,
date.
when people go to utilities, obviously I know it as quote unquote a defensive stock. Utilities also good dividend payers, I would think.
Yeah, they are very good dividend payers, which is one of the reasons they are defensive.
Okay.
But it's interesting because we'll look at the mid and small caps here in a second.
Mm.
But this also is a play on nuclear.
Oh, I didn't know that. Okay.
Yeah, it's conventional electricity, but it's based on nuclear power.
No idea.
So Meta, GE. Look at the number one loser year to date.
Oh, poor Tesla.
Tesla. So these are the small and mid caps. The number one gainer, of course, is Supermicro.
Supermicro.
But look at number 4.
Oh, energy again.
Vistra Energy, utilities, conventional energy.
Hmm.
That one has just it's got a beautiful chart, 45-degree angle from lower left to upper right.
Hmm.
So utilities, interestingly, are making a comeback.
Interesting. Okay.
All right. So here's the 1 week chart view of the sectors. Again, I showed you the 1 month view. This is the 1 week view. Every single one that's underperforming are the aggressive sectors for the week. So this is the rotation.
I love that chart.
See, yeah, NASDAQ and technology are way down here in the lagging. Communication services, the internet stocks are heading down. XLY is still hanging out in the improving area, but the ones that are moving up, you can see their trajectories, they're all defensive.
Okay.
This clearly shows rotation.
Yeah, clearly.
I talked about this quite a bit in my newsletter, and I think the rotation is moving into small caps from large cap.
Greatly underperforming. Yeah.
Right. They have underperformed. I put a whole section in here from Real Investment Advice. They have some really interesting stuff sometimes, and you'll love this one. This is the artificial intelligence, which will lead us into
Oh, look
Nvidia.
at that. Somebody else has brought that up. That's funny.
Yep. 1999, Cisco Systems.
Yeah, it
Fell.
was a great moneymaker for me for a while.
Yep. They actually say in here some people lost 85%.
Oh, I know somebody who did that. Yes, absolutely.
So their point is, are we in a bubble like this? Is it just a top or is it a bubble?
Yeah.
And they provide all the evidence. It's all in the newsletter if you want to go read it. There's the S&P 4 PE. There's the Magnificent Seven way up here. Right. Here's the earnings per share consensus, Magnificent Seven way up here. So is it a bubble or is it a top? So they say probably not a bubble yet.
Right.
Yet. So this is an interesting one here. So this is the 2000 dot-com boom. The difference between the tech market cap and profit share, P500.
Yep, I see it.
There was a huge gap back then, 2x gap. Right now it's 1.25 gap.
Oh, yeah. Okay.
So it's not as big as back then. So that's one of the reasons they say it's not a bubble.
But it could get there.
But it could get there. Yes.
Oh, yeah, for sure.
So probably a market top. And this will lead us into our next session where we'll talk about 60% market crashes.
Yep.
Right.
Okay. Yep.
And this one finally is my own sentiment chart. This is the National Association of Active Investment Managers. Whenever they are overly bullish, that's when the market usually tops.
Right.
When they're overly bearish, that's when it usually bottoms. So I circle this area. This is the end of 21 when the market was hitting all-time highs.
Yep.
That line right across here. And it looks very similar to what it looks like right now.
Yeah, it does.
This is going up. That's going up. This is going down. That's going down. It's right at that extreme bullish area. So it looks very similar.
Yep.
And then the Keltner channels, which shows you the extremes. We've been at the extremes for quite a while. So whenever you have a bullish run like this, you can't predict when it's going to end. The market can stay ridiculous longer than you can stay solvent.
Yeah.
It can just keep going up.
Yeah, for sure.
So that's the bottom in October. We just continued to head higher. This is one of the reasons, by the way, it's so important whenever markets go down like they did in 22 to be aware of when they are going to bottom, because this is where the big money is made.
Oh, for sure.
Getting in right here and riding that out.
Okay.
But it's hard to do because when it's hitting bottoms now, I told people in October that we're going to hit the bottom in October. But it's really scary because it just keeps going down. It went down for almost the whole year, right?
Yeah.
So it starts coming up, and everyone says, "Oh, it's just going to do the same thing it did here. It's going to do the same thing it did here. It's just going to go back down." But there are ways to tell. And this chart down here is one of the best ways. This one I created this one down here. It's one of the best ways to identify where the bottom is.
Nice.
All right, so let's take a look at Nvidia.
And again, let's remind people, they can go back and look at the receipts. You got into Nvidia somewhere in the mid to high threes.
I got in here at 300.
Yeah, 300.
It was back here in September, maybe before that even.
Okay, so around 300. It's had a nice run.
Yep. Huge.
And I remember you saying this might be a stock you'll be in for a long time. So this is changing.
And I considered that, but I just hate to give up such a huge gain.
Okay. All right. So what are you thinking?
So I was thinking with Nvidia, I mean, it's just gone up a ridiculous amount, and it's warranted. I mean, it's a great company. But I was thinking, when it hits 1,000, I bet that's when all the Wall Street traders are going to start selling. And then I thought,
Mm.
I bet they won't even wait till 1,000.
Okay.
They'll probably do it just before 1,000.
Okay.
Look where it hit, 975 on Friday.
Yep.
And then it just started selling relentlessly the whole day.
Mm-hmm.
All right, now, interestingly, it's still a blue bar. For those that watched last Monday, when I did my educational video,
Yep.
when I talked about these impulse bars. And by the way, those that have Thinkorswim, which Schwab is going to force everybody to go to Thinkorswim.
Okay.
So I'm in the process of learning it and switching all of my trading platform because I do it my trading on Schwab.
Mm.
But Thinkorswim has these impulse bars also. So this is Stock Charts, which has them, but Thinkorswim also has these.
Mm.
So if you're using that platform, you're able to get these kind of bars. They actually have them as candles, which is even better.
Mm.
But here's what it looks like. Here's a closer look. That right there is called an engulfing candle.
Okay.
That candle completely engulfs the previous day.
Oh yeah.
You see that?
Look at the trading volume too. Whoosh.
And trading volume was the highest. It's the highest of the year, I think, and it wasn't even at options expiration.
Yeah. Not an earnings day. Nothing. Yeah. Just
right. So those two things right there are extremely bearish.
Hmm.
So it's been following. It came back to the 21-day right here just before earnings and went back up, and it could do the same thing again. Now the 21-day is below 800 right now. But if it goes below the 5-day, the pink line right here, which is about 850, that's where my stop is.
Okay.
I'm going to be out, and then I'm going to watch it. I might get back in. We'll see what happens.
Okay.
But Nvidia may be sending us a signal for, I've talked about March. Here's AMD. That is a shooting star. Also an extremely bearish candle. SMCI, which is kind of hard to, SMCI didn't really come down a lot, but it did come down. That one could drop too. But all the AI stocks.
Yeah, it was everything AI related.
AI, Palantir, which is the one I used for my training last Monday. It came down as well. I think in the training I put a support level, and folks can go back and look at the training. I think I put the support level right about here. So right about there. So it hasn't come down to it yet, but it's pretty close.
Yeah. I don't know if you're ready for this, but why don't we look at BTC? It had a interesting week, took out an all-time high.
What is it?
Bitcoin.
BTC. Well, let's do it this way. Go back to my website on the homepage.
Yeah, right on the homepage.
By the way, I put this little ticker thing
Look
going
at
across there, which has Bitcoin on it too.
Fancy.
Here's Bitcoin right here. Bitcoin just keeps going higher. So it's probably will continue going higher. 70,000, I think, is a major resistance level.
Yeah, it's an all-time high. Yeah.
If we go back, let's go back 10 years, just out of curiosity. It's actually above the all-time high. It's right about, it's basically right at the all-time high.
Yeah, it took out an all-time high, I think, Friday morning or something.
Yeah.
70. The old high was 69 something.
Right. And it's parabolic. That is a parabolic move.
Yeah, it is.
Those are not sustainable. But you don't know when it's going to end until it does.
No, that's BlackRock. I think it was BlackRock putting $10 billion to work in 7 or 8 weeks. That's what that was.
Yeah, this is using the impulse bars. You can see they're all blue, which is a neutral. So green means the trend and momentum are both going up. Blue means one of those is not going up. So this is probably the trend is still up, but momentum is starting to slow down.
Wane. Yeah. Okay.
Yeah. But it's still definitely going higher.
Yeah, no kidding.
So
Cool.
that's a good thing. And
Yeah.
then on my portfolios page where I'm tracking, I did a little session here at my community on
Mhm.
Saturday. The
Yep.
people are starting to come to that. And one person said, well, you can't really time the market. I said, well, you really can time the market. And I'm going to explain that when we get to the next session here in a second about 60% market crashes.
Hmm.
But I actually call this the market timing strategy. And it's still bullish. Now, we might be on the verge of the market starting to go down. And if
Sure.
that happens, then these short term and midterm will start to turn bearish.
Yep.
But you're going to get a good warning sign well in advance.
Yeah, the key having seen you go through this for a while now, we got receipts. Really what your point is here is you're not calling the top or the bottom. What you're
Right.
calling is a momentum. So you're trying to get
Yes.
80% or protect 80%.
That's right. I will say that I can never call the top or the bottom.
Nobody
Nobody
can.
can. Nobody can. But I can call the trend.
Correct.
And that's really what this is. It's really a trend timing system.
Yeah, I like it. Very cool.
But I
Well,
can definitely call the trend. And if I can
oh, for
catch
sure.
80% of that trend, either way, up or down.
Either way, exactly. Yeah.
So that's really the key. And I update this every day. So anybody that wants to, use this system, this strategy,
Mhm.
all they have to do is log into the website and just look at what the
Yeah,
status is.
there you go.
Pretty
Well,
simple.
I look,
One symbol, one trade. It's only been one trade in the whole year for this. It's up 111%.
yeah, with one trade. Not bad.
Yeah.
Not bad. All righty. I look forward to talking about 60% stock crashes, but let's tell them what your website is one more time.
Sure. It's breakpointtrading.net. If you just want the newsletter, you can just click on this button. If you want to get alerted the newsletter is available, then just sign up for the $0 down at the bottom,
Mhm.
and you'll get a reminder that it's out there.
Awesome. Thank you so much.
You bet. Take care.